Now, whilst we have probably seen a trough of economic data when it comes to China in the third quarter of 2023, investors looking into 2024 perhaps shouldn't expect a V-shaped economic recovery. The reason being is that the government's policy response has transitioned away from big bang policy stimulus that many investors are used to, so for example in 2008, to more targeted and precise policy support. Expect more incremental supportive measures really underpinning growth across the economy, and these policies in aggregate are expected to be quite meaningful. Growth for China is about viable, sustainable, moderate growth. We don't need to see GDP come in at 9 or 10% anymore, given where the economy is in the cycle. So 2024 is also probably about this continuation of investors' expectations when it comes to China and the resetting of expectations when it comes to growth, both when it comes to economic growth as well as market returns. The investment process of the China-focused strategy remains exactly the same. So it's all about identifying good companies run by good management teams at a good price. We believe that owning a basket of well-run and well-financed Chinese companies offers a margin of safety. Plus, you have the optionality of seeing re-ratings when it comes to earnings as well as multiples. A well-financed company also provides time. So under the scenario where the Chinese economy does go into a downturn, when the cycle does recover, these companies will still be around. And a strong or solid business model should in fact see more value add to these companies. The kind of opportunities we're finding are across the board, but of note, a number of opportunities when it comes to names in the commodity sector, so for example oil and gas, as well as consumer products, both staples as well as discretionary. The risk, especially when it comes to commodities, is that we do see the health of the global economy deteriorate, which in turn has a knock-on effect in terms of commodity demand. For the domestic consumption market, it's all about the revival of confidence and really seeing that upswing in terms of consumer spending. From a valuations perspective, China is trading at significantly attractive multiples, the lowest EPS or earnings per share in a decade, as well as very low PEs or price earnings. But let's face it, sentiment remains weak. We don't expect to see a massive turnaround in sentiment, especially in the first half of 2024. But under the scenario whereby we do see the government reforms work, then top-down this bodes well for a good result. So top-down, coupled with attractive bottom-up fundamentals, should see Chinese equities deliver attractive earnings as well as returns for investors.